Sandip Sabharwal is also joining us for more. Thanks for that, Anurag. Sandip, good morning. Sandip, let's start our chat with the capital goods space. We all know that in last 1 or 2 months, many of our friends in the industry have been trimming some of the top quality capital good names because the valuations have become way too high on the higher side. But look at the way Cummins earnings were commentary today. ABB too, good strong numbers, strong commentary. And some of these names have gone through a bit of a correction, a shallow one. What do you think of it? The prices and the valuation will justify because of the kind of performance, solid performance they are putting in, some of these names?
From the company conference calls, from whatever I've attended across the board, it looks like the pipeline of orders or the visibility of growth seems to be strong for many of these companies for the next 2-3 years at least, both domestically and those who are in the international markets internationally also. However, like you said at upfront, that it's a question of valuations. It's a valuation mismatch vis-a-vis what might be the immediate delivery. And to that extent, near-term upsides will be limited in all these companies. And if there's a market correction, then I think they could correct more. So people should wait. So whoever owns them, largely there's no reason to sell. Like if you have bought it really cheap, then you don't want to sell it even if there's a 10-15% correction. And those who want to buy afresh, I think it will make sense to wait out.
Okay, meantime, let's get in a take from you, Sandeep, as to what the expectation is from Ola Electric. All eyes on this one, the listing today. And, when just about a few days ago, we were talking about an 18 to 20% premium expectation. And now, basis the kind of data that we're getting in the grey market, expectations are that it would be pretty muted. What's your view on Ola Electric?
My view is not positive on Ola Electric because, in my view, the business model which they have, the sales to like the profitability, if you measure it vis-a-vis sales and you actually extrapolate it for any time in the future, you'll realize that it will be tough for them to ever make profits. So then, how do you value this company has been a challenge for me. And to that extent, I would think that whoever is betting on it, it's just betting. So it's like the fundamental basis is missing because they will continuously lose market share over the next 2-3 years. The change in the incentives regime also will not favor it so much. So I think it's going to be a tough ask. So if they deliver over the long run, then it might perform, but I don't really see any triggers.
Right. Okay, even your favorite Tech Wabag came out with results. Look at that, 13% margins, higher by almost 110 basis point, 25% EBITDA growth and 15% kind of top line growth. What do you make of the performance this quarter, Sandeep?
Performance seems in line with expectations. I think they have been guiding for improvement in profitability, which played out. They have been guiding for improved execution because last year the execution was lower as they shifted focus from not doing too much of construction. And I think they are well on the way towards achieving what they have guided. Now we need to get more insights in the conference call as to the order bookings, etc. Because for many of the capital good and infrastructure companies, the first quarter has been muted in terms of order inflow, and they have guided for aggressive order inflow for this year. So we need to see what they're saying on that.
Fine. Chandan Taparia is also joining us. Chandan, morning. Chandan, I want to talk to you about some of these pharma names, pharma has been in a stealth bull market for some time now. But it appears that fresh moves are happening in some of these names. Look at how your Piramal Pharma shot up last 2 days. Lupin, even after a good number and upgrades, further fresh longs. What are your top pharma bets right now?
So thank you so much. First, talking about the Nifty Pharma Index, this index has been making high tops, high bottom. And in the last month, we have seen the recent highest gain in this sector. And we believe that some sort of margin of safety and defensive name came into the picture because index witnessed some volatile swings. And we have noticed that most of the pharma stocks are doing well. So the entire sector looks good. We believe still 5 to 10% kind of run up could be there in the entire sector. Now talking about the preferred pick in pharma, I can note down or I can list the few names. First will be Alkem. We have noticed that the stock has given a consolidation breakout of last 25-30 weeks. Earlier it was finding hurdle near 5500 to 5580 zone. It has given a decisive close above the same, holding well above its 50-day exponential moving average. So expecting run up in the Alkem. Apart from Alkem, I can look at the counter like Lupin. However, we have seen good run up in last 5-6 weeks. But as of now, the way put writing is happening at 2000, this momentum can extend towards 2150 to 2200 zone. So Alkem, Lupin, and apart from that, one need to look at the counter like Syngene, Granules. Most of the pharma stock looks good, and Alkem and Lupin will be my two preferred pick in the entire pack.
Interesting news bit that foreign portfolio investors have purchased nearly $1.4 billion worth of IT stocks in the month of July. That's the highest actually that we've seen since April 2022's reclassification. And Sandeep, this has been attributed to the anticipated US rate cut as well as positive earnings from the likes of TCS and Infosys. Your stance on IT?
So IT1, we've seen that there's been a substantial run up. Most of the stocks have run up by around 20% from where they were a couple of months back in the anticipation of a recovery cycle playing out. However, as we see things today, the upgrade in earnings has been there, but it's been 1 or 2%. So I think for that, the move which we have seen in IT, in my view, is sufficient. Today, there are mixed views on the US economy. On one side, there's a view that a recession has already started and it could play out over the next few months. There's another view that there could be slowdown, and that's why there'll be aggressive rate cuts. So in this scenario, and on the run up to the presidential election, it's tough to make a case that IT spending will actually substantially improve. So I would think that most of the positives are in the price now.
Also, this entire real estate pack, Kunal, the real estate pack got a fresh kind of shot in the arm because of the relief coming in from the government side on long-term capital gains. Sobha in particular came out with a good set of numbers. This has been leading from the front. How does this stock look to you on the charts?
Yeah, it's an interesting chart because I think just about last year, mid 2023 start somewhere, the stock was almost at 400, 450 levels, and very consistently the stock moved towards the 2000 mark. So it's very rare to see these kind of consistent behaviors from a high beta space like the real estate. But interestingly, the stock is now corrected from those 2000, 2100 levels to now 1600, 1700 zone. I think this could be a very good territory to try and go for a contra buy for Sobha, because on the way up when the stock was moving up hard, the volumes were pretty much on the higher side. The volumes in the last 2-3 days, for example, as a corrective wave for the stock, the volumes have dipped to almost 50% of the average volumes, or less than 50% of the average volumes the stock was exhibiting on the days when the stock used to see signs of rally. So that itself indicates that it's selling on lower volumes, which could eventually lead to a mean reversion, and then probably an opportunity for someone who's missed out a little to buy the stock. So I think at 15-20% lower levels over the past previous swing highs from those 2100 levels, I think it's a very good entry point.
Okay, fair enough. Stay with us. And meantime, the long-term bull market is here to stay. That's the word coming in from market mogul Mark Mobius. He believes that the rally will sustain as long as the global indices, the likes of the S&P 500, continue to rise, and there will be bouts of correction now and then. Sounding overtly bullish on Indian equities, he says the domestic investor has been steering the upward move. Let's hear him out.
I believe the long-term bull market is intact. And because the U.S. is leading in this regard, you can see there's been a correction, but it's not a big correction in the context of what we've seen in the past. So as long as that S&P 500 continues to move up with corrections along the way, 5%, so forth, then I believe that you're going to see globally a very, very good bull market in most countries around the world, particularly India. I believe flows into Indian stocks will continue, and as foreign investors become more and more comfortable with going into India, making it, and of course, if the system is made easier for funds to come in, then I believe you're going to see a continuation of this situation where more and more foreigners have holdings in India. It's not foreign investors who drive the Indian market, it's domestic investors. It's interesting that the RBI recently said that they want the banks to attract more deposits. And probably one of the reasons for this is that there are too many retail investors going into the market and gambling. And it might be a good idea for them rather to keep some money in the banks rather than in stocks. But that's just a very short-term kind of view. Right now, large cap are more attractive. In the past, the mid cap was more attractive to us, but now large cap is where we want to be. The emphasis for us now would be on raw materials. But sure, Reliance and these other big stocks look quite good, particularly in view of the fact that they're going to be benefiting from this incredible growth in India. So generally speaking, those large caps with strong balance sheets will do fine.
So Mark Mobius believes that this is a time to be bullish on large caps relatively, and material stocks is something he likes. Sandeep, I want to talk about the battery stocks. The latest IPO, Exicom, the renewable battery maker, then Amara Raja and Exide also transforming from legacy to new age batteries. In fact, over the weekend, Amara Raja is taking a bunch of analysts to showcase their gigafactory as well. How do the stories look right now versus the valuations they are at right now?
So valuations have run ahead a bit of what the company is actually going to deliver, at least in the short to medium term. However, longer term prospects look good because the value realization per vehicle for these companies, if they are successful in setting up these plants efficiently, or if they supply power for many of the renewable energy projects, now the government wants battery storage also to be there. So I think the demand prospects are good. How well they can address it, that's something which we need to see. So I would think that these are stocks which are definitely buys on dips. So I think we need to wait for dips in these stocks because of weak market, some bad results, etc. periods, and then buy for the long term.
Sandeep, what's the view on ABB, given that while the top line growth mightn't have been that encouraging, the rest of the parameters were absolutely strong from ABB India?
So I think there's nothing wrong with what's coming out of ABB in terms of delivery, order booking results, except for the valuation. So I think it's just the valuations are so excessive that it's tough to make a case to buy immediately. So I think a lot of these stocks are stocks which you need to track and then buy when there's a dip. And the markets have been showing very volatile movements, which typically, in my view, indicate that there could be more volatility ahead. So I think that could provide opportunities in many of these good quality stocks.
Insurance is also witnessing a lot of interest in the last few days. LIC came out with a good set of numbers. Chandan, most of these stocks are in F&O as well. If I were to ask you about betting on a few of them, which ones are strong looking? Which are the ones which are looking strong to you?
So most of the insurance companies are doing well, whether we talk about the SDFC Life or ICICI Pru Life. So I'll go with ICICI Pru Life. The stock has given a classical price breakout on the daily chart, and on the weekly chart, it has been making higher tops, higher bottom. We have noticed that in last 9 to 10 days, it has taken multiple support near 695, 700 zone with hurdle at 740, and now the way it is forming slightly higher tops, higher bottom on the early chart, this breakout could be seen and which can turn into the small pole and flag breakout. Derivatives wise, we have seen some built up of long position. The stock is giving a range breakout of last 4 years. So I believe this momentum could see stock has potential to really buy 5 to 8% immediate basis. So one can buy with support of 720, and we are expecting this rally to extend to us 777 to 790 zone.
The insurance as well. The life insurance company has announced that it's going to be entering now health insurance segment by way of buying a majority stake in a standalone health insurance company. In fact, my colleague Anurag Shah is here with more on what he's picking up on the same.
So LIC is planning to buy majority stake in presently available standalone health insurance company, and this year itself LIC is planning to buy the majority stake, and internally the work is going on to buy majority stake in presently available standalone health insurer. So presently in the country there are 7 health insurance companies are there. Out of 7 there are two insurers are recently started in the year 2024 only. They got the IRDA license. So 5 are available on the neck, and out of 5 one is a listed player, Star Health. Another one is the Niva Bupa. They are planning for the listing. So then it remains to the 3 standalone health insurance companies. Because as per LIC MD and CEO Siddharth Mohanty, that composite license will be reality very soon, because Insurance Act amendment will make sure the insurance companies can venture into health insurance, life insurance, or standalone health insurance also, because composite license draft was presented, and after the draft it's likely to be reality in upcoming session of the parliament. So after that it will be possible for insurance companies to offer all type of products. So for that only LIC is planning to venture into health insurance, and this year itself LIC will buy a majority stake in a standalone health insurance company. Apart from that, LIC MD and CEO Siddharth Mohanty has also mentioned that LIC will manage their real estate professionally, because there are a couple of news going on about the monetization of LIC real estate, which is of approximately 50,000 crore to 1 lakh crore. So there are 1900 properties across the country of LIC, out of which 1400 LIC operations are going on, but there are 500 other properties also, and a prime location properties. So LIC will manage that real estate professionally, which will be valuable for all stakeholders.
Thanks for that. Moving right on then, and we're talking about one of the most anticipated IPOs, that's Ola Electric. They're going to be driving into D Street today. Let's get in all the details, all that you need to know. We've got Astha standing by to fill us in. Astha.
Well, Ola Electric is all set to be listed today. As you can see, it's all prepared and hyped, and excitement is going on today. This the much anticipated IPO, which opened for subscription for from August 2 to 6, is garnered a decent response and being oversubscribed by 4.45 times as well. The allotment for the IPO was finalized on August 7, and since then the investors were waiting for the Ola Electric to be listed, and well, today the listing day has already been here. The grey market has been indicating a subdued listing for Ola Electric. If you say, the GMP has been consistently negative, suggesting a potential discount to the issue price upon the listing, but currently the GMP stands at a discount of rupees 3, implying expected listing price of around 73 per share. While the company's ambitions, plans in electric was space generated excitement. According to the stock market observers, the available discount is rupees 3 in the grey market today as well, and the overall subscription is 4.26 times. Well, today is the day where the Ola Electric will be listed in a couple of minutes, and then we can see the hype, how it opens up in the market today.
Right. So that's the action as far as Ola Electric IPO is concerned. Let's see how the street actually treats the stock. The grey market premium came down from 15-16 bucks to almost a buck or two. Let's see how it goes from here on. But I'd like to go back to hospitals. My colleague Anurag Joshi just told you that how there are 2-3 big private equity companies looking at CVC Capital stake in Healthcare Global. Not only that, the company came out with the results. Healthcare Global saw very strong numbers. Last evening the numbers came out, margin expansion, etc. Hospitals have also been in focus. Sandip, Healthcare Global in particular is the oncology specialist. Do you think it can garner a premium versus general hospital valuations which they are trading at?
So first of all, Ajay, most of the hospital companies are already trading at a huge premium. So to that extent, making a case for further premium will be tougher. But that said, I agree with you that across the board, the results have been pretty decent. The top line growth is reasonable, and profitability improvement is something which we've seen. And this is a space where I think the pricing power remains with many of these hospital chains. Healthcare costs have been moving up, and with health insurance becoming more and more prevalent, a lot of these private hospitals will continue to do well long term. So again, it's a question of buying at, trying to buy at least at the right time, because in bull market sometimes you don't get the prices which you want. So I think directionally the sector is well placed, but many of these stocks are, I think, valued at very high valuation.
The segment of stocks I want to talk about is railways, and I'm just taking a leaf from RVNL's earnings. Very disappointing, both sequentially as well as on an annual basis. I mean, yes, you could say that, one big reason that they could not execute the orders was perhaps because of elections. But that aside, do you think that the market has overpriced in the earnings from some of these railway companies? Even though some of the skim has come off from the top, do you think there could be more to go for names like RVNL?
Yeah, most likely because of the fact that the delivery across both the private sector as well as the public sector railway companies has been muted. So they have seen 2 years of very aggressive growth from very low levels. Now there is some sort of moderation in growth. Even the railways, although railways has aggressive growth plans, but I think incremental growth could be slowing down unless and until new projects, new new procurements of wagons, trains, etc. are announced, which many of these companies are expecting. So, in the near term, given the way they have moved up over the last couple of years, we should see some more correction across the board in railway stocks.
Although in the last 3 months, the stock has risen about 106%. But yeah, to the point on earnings, they've seen a revenue decline of about almost 27% in this quarter. PAT has come in lower by nearly about 35%. And the margins as well have seen a dip down of about almost 180 basis points. So that's RVNL. Of course, was a lag in yesterday's trading session. Other than that, of course, while we're counting down to what Ola's listing is going to be like, bunch of other stocks which are also going to be in focus this morning. We flagged off as to how in trade yesterday you did see a very mixed bag. You had an HDFC Bank, a Tata Motors, HDFC Life, Bharti hold out. A large chunk of the market did not. And thanks to HDFC Bank and because of its weightage in the Nifty Bank, you had the Nifty Bank resurrect. Because it's not like the other banking majors were holding up in the green. It was a solo case of HDFC Bank. Sandeep, you think much of the damage after the Q1 update on HDFC Bank could be behind us? Now you'll have the MSCI flows as well come in. I mean, could the stock get back to its previous high?
So, banking industry, Aisha, is facing multiple headwinds. One, the asset quality seems to have peaked out. Secondly, the deposit growth is such that it's going to constrain trade growth. And third are the new liquidity norms which RBI has proposed. So the challenge is growing earnings in this entire scenario for banks in general. So I think as I track the earning expectation, I think the earning expectations for most of the banks from most analysts are high at this point of time vis-a-vis what they'll be able to deliver. So financials as a sector should be an underperformer in my view.
Cochin Shipyard, though, has come out with a decent set of numbers. The net profit has come in at about 174 crore rupees, which is an uptick of a mammoth 76.6% on a year-on-year basis. Remember, the comparable quarter numbers were about 99 crores, which is the same quarter last year, or on a year-on-year basis. So yeah, Cochin Shipyard definitely is going to be one such case in story. But Sandeep, when it comes to the larger defense PSU pack, and I'm going to add in railways here, do you think it's more a case-specific story, and you can't really sort of blanket it by saying that across the board, yes, stocks have run up, but earnings, case in point being Cochin Shipyard, maybe the market was right in subscribing at the kind of valuation it has so far.
Yeah, so I think we've seen one big up move across the sector. Now it will become stock specific as to which companies deliver, which have the orders, which are able to deliver orders, execute more efficiently, and so we'll see divergent performances. So I think what you're saying is right, that from here on it has to be stock by stock.
Okay, stock specific it is going to be, as would be, I guess, the case for the rest of the market too. But Sandip, good to have you on the show as always.
If you like this video, then like, share and subscribe to ET Now.